Two men, one room. A decision that will move every single market on the planet, right now. As you watch this video, Donald Trump and Xi Jinping are sitting across from each other in Beijing, and what they agree to, or fail to agree to, in the next 48 hours will determine the direction of global stocks, oil prices, the AI industry, and the world economy for the rest of 2026. I am not being dramatic. Let me give you 5 numbers that prove it. $202 billion, the current annual US-China trade deficit that is on the negotiating table. $100, the price of a barrel of oil that has been crushing consumers and driving inflation for 3 months because of a war that China may be the only country that can help resolve. $12 trillion. The combined market cap of the companies whose CEOs flew to Beijing on Air Force One with Trump. $190 billion. Microsoft's AI capital spending plan for 2026, which depends on semiconductor supply chains that run directly through us, China trade policy. 9 years Fei, how long it has been since an American president set foot in Beijing. 9 years of tension, tariffs, trade wars, and a global economy that has been forced to pick sides. Those 5 numbers are not background context. They are the stakes of the meeting happening in Beijing right now, and every single one of them is about to change. The question is, which direction? That is what I am breaking down for you today. Not just what is happening in Beijing, but what it means for your portfolio, which stocks win, which stocks lose, and what moves I would be watching right now if I were positioning for the next 6 months. This is the most important geopolitical event for global markets in 2026. Let's get into it. Before we start, subscribe right now. When history moves this fast, you cannot afford to be behind. Every time something this big happens, I am here breaking it down before the dust settles. Hit subscribe. Let's go. To understand why this summit could reshape the global economy, you need to understand the world it is happening in, because this is not a normal diplomatic meeting. This is a meeting between 2 superpowers who have spent the last 18 months in an economic war, and who are now being forced to deal with each other by a global crisis. Neither of them caused. Let me give you the timeline. Early 2025. Trump returns to office and immediately escalates the trade war. Tariffs on Chinese goods climb from 57% to over 140%. The highest levels in modern history. China retaliates with export restrictions on rare earth minerals and magnets, the materials that go into everything from EV motors to missile guidance systems. The global supply chain fractures. October 2025. The two sides blink. At an APEC summit in South Korea, Trump and Xi reach a temporary truce. U.S. tariffs on Chinese imports drop from 57% to 47%. China secures U.S. access to critical minerals. Both sides claim victory. Neither side trusts the other. Chinese exports to the U.S. are still falling, down 11% year over year by early 2026. The 28th of February, 2026. Everything changes. The U.S. and Israel strike Iran. The Strait of Hormuz, the narrow waterway through which 20% of the world's oil flows every single day, is disrupted. Oil spikes from $70 to over $106 a barrel. Inflation, which was finally coming under control, re-accelerates. The global economy faces its biggest supply shock since the 1973 oil embargo. March 2026. Trump was supposed to visit Beijing. He delays the trip because of Iran, promising the war would be resolved in 4 to 6 weeks. Months later, the ceasefire is on what Trump himself calls massive life support. Iran is unresolved, oil is still above $100, and the Beijing trip cannot wait any longer. May 13, 2026. Trump lands in Beijing. The summit that was supposed to be about trade has become about something much bigger, the future of the global economic order. Here is the critical thing to understand about the world that produced this summit. China has spent the last 18 months doing something remarkable. While the US was imposing tariffs and trying to decouple, China was quietly reorienting its entire trade network. In the first 2 months of 2026, China's exports grew by 21.8% year over year, not because trade with the US recovered, but but because China aggressively expanded trade with Southeast Asia, Africa, the Middle East, and Latin America. China is no longer as dependent on the US market as it was in 2017, and Xi knows it. That is why experts at the Council on Foreign Relations say Xi is walking into this meeting with the upper hand. That confidence, the confidence that the East is rising, and the West is declining, shapes everything about how China negotiates, and it shapes everything about what the summit can and cannot deliver. There are 5 potential announcements out of this summit. Each one is a market bomb, either positive or negative. Let me walk through each one, tell you the probability Wall Street is assigning to it, and tell you exactly which stocks move if it happens. What it is, China announces the largest commercial aircraft order in history, potentially $100 billion or more, in Boeing jets for Chinese airlines. Faith the probability, prediction market traders give this an 86% chance of happening. Boeing stock was already up 2% yesterday in anticipation. Wolf Research wrote that Trump wants this to be the largest order ever announced, which could mean a Boeing purchase commitment in the triple-digit billions. What it means for markets, if this deal is announced and appears credible, specific airlines named, specific aircraft models, realistic delivery timelines, Boeing could pop 8 to 15% in a single session. That would be one of the biggest single-day moves for a Dow component in years. But here is the catch I need you to understand. At the 2017 Beijing Summit, China announced $83.7 billion in business deals, memoranda of understanding that exceeded West Virginia's entire GDP. Almost none of it materialized. The market knows this, which is why investors will be analyzing the fine print immediately after any Boeing announcement. The questions they'll ask: is this a binding purchase agreement or a non-binding MO? Which specific Chinese airlines are named? What is the delivery timeline? What financing terms are attached? A credible binding $80 minus $100 billion Boeing order is a stock rocket. A vague headline move that sounds big but has no teeth is a sell, the news moment after the initial pop. Face stocks that move, Boeing, but directly, also Spirit Aerosystems, Howmet Aerospace, and the broader aerospace supply chain. GE Aerospace, which makes engines for Boeing aircraft, gets a secondary boost. What it is, Xi agrees to use China's close relationship with Iran to push Tehran toward a real peace deal, reopening the Strait of Hormuz and ending the oil crisis. Probability, prediction markets give a 61% chance that Iran comes up substantively in the bilateral meeting. China has every economic incentive to see the strait reopen. It is the world's largest consumer of Iranian oil, and the blockade is directly hurting its economy. Iran's foreign minister literally visited Beijing just days before this summit. China has communication channels with Tehran that the US does not. If Xi is willing to use that leverage, a peace deal could move from on life support to genuinely possible within weeks. What it means for markets, and this is the big one, if China mediates and a real Iran deal is announced or becomes credibly close, oil drops, maybe not immediately, maybe not to $70 overnight, but the direction changes. And when oil starts falling from $100 plus, the ripple effects through the entire global economy are massive. Inflation expectations drop. The Fed gets room to eventually cut rates. Consumer spending recovers. The 40% rise in gas prices that has been draining American households reverses. Every sector that has been crushed by oil-driven inflation gets a tailwind. This is the single biggest potential positive catalyst in global markets right now. Not just for us stocks, for every stock market on Earth. Face stocks that move on an Iran deal, energy stocks sell off. Devon, Exxon, ConocoPhillips lose their oil price tailwind. Consumer discretionary surges. McDonald's, Nike. Amazon benefit from consumer spending recovery. Airlines surge. Fuel costs drop. Demand recovers. Delta, United, Southwest all pop. Fed rate cut odds spike. Rate-sensitive sectors, REITs, utilities, small capses rally. Inflation-linked bonds sell off. Tips lose their premium as inflation expectations drop. Stocks that move if Iran deal fails. Status quo continues. Energy stays elevated. Consumer discretionary stays under pressure. Fed stays frozen oil. Importing countries Japan, South Korea, India. Europe continue to struggle. This is why Iran is the most important variable at this summit. Not the Boeing order, not the soybeans Iran. What it is, asterisk, the US modifies, either relaxes or tightens the export controls that currently prevent Nvidia and other US chip companies from selling their most advanced AI chips to Chinese companies. Faithy probability, Jensen Huang, flew to Beijing at the last minute specifically to have this conversation. China wants access to advanced AI chips desperately. Traders give 54% odds that AI comes up substantively. Here is the background. Current US export controls block Nvidia from selling H100, H200, and Blackwell chips to Chinese buyers. These restrictions represent tens of billions in potential Nvidia revenue that is currently off. Limits China's AI industry is being starved of the computing power it needs, which is exactly what the controls are designed to do. At the summit, there are two possible directions. Fei direction, a partial relaxation, the US agrees to allow certain chip sales to Chinese civilian companies, not military, not government, but commercial AI applications. This would be framed as a goodwill gesture in exchange for some Chinese concession, maybe rare earths, maybe Iran mediation. If this happens, Nvidia pops hard. We're talking potentially 10 to 15% in a session for a company that is already one of the most valuable on Earth. AMD, Micron, Broadcom, the entire semiconductor sector gets a tailwind. Fei direction B, further tightening. The US uses the summit as an opportunity to announce additional restrictions, perhaps targeting the H20 chip that Nvidia specifically designed to comply with current controls. This would be a major negative for the sector. We got a preview of what chip restriction news does to stocks last week. Qualcomm dropped 13% in a single session, Intel dropped 8%. The semiconductor ETF, SOX, dropped 5%. If further tightening is announced out of Beijing, expect similar moves, except this time the entire sector gets hit simultaneously, not just one company. Fei stocks that move, Nvidia, NVDA, AMD, Qualcomm, Intel, Micron, Broadcom, TSMC, ASML. This is a sector-wide binary event. Fei what it is, China agrees to fully restore and stabilize rare earth and rare earth magnet exports to the United States in exchange for tariff reductions or other concessions. Faithy probability, high. This is one of the most likely concrete deliverables because it costs China relatively little strategically while giving Trump something he can sell as a win. Here is why rare earths matter so much. China controls 85% of global rare earth processing capacity. These materials, neodymium, dysprosium, terbium, go into the permanent magnets that power electric vehicle, motors, wind turbines, drones, missile guidance systems, and the cooling fans inside AI data centers. When Xi threatened to restrict these flows in 2025, it was described as China's break glass weapon, the nuclear option in the trade war. The fact that Trump backed down from tariff escalation when China threatened rare earth restrictions tells you everything about how critical these materials are. A stable rare earth supply agreement would be massively positive for US manufacturing, defense, and the EV supply chain. Companies that have been scrambling to build alternative rare earth supply chains at enormous cost would get relief. Stocks that move, US rare earth miners like MP Materials, MP potentially sell off if Chinese supply returns and reduces the urgency of domestic production, EV manufacturers, positive. As supply chain costs stabilize, defense contractors, positive. As rare earth availability for PON systems improves, renewable energy companies, positive. As wind turbine magnet costs stabilize Feiwhat. It is, C, extracts meaningful concessions from Trump on US policy toward Taiwan in exchange for help with Iran, rare earths, or other summit deliverables. The probability, this is the darkest scenario, and experts say it is more likely than markets are currently pricing. Chinese scholars suggest Beijing will press for an explicit statement opposing Taiwan independence rather than the current not supporting formulation, and for us pre-negotiation on arms sales. The Trump administration has already delayed a major arms package to Taiwan, and Trump has publicly acknowledged discussing arms sales with Xi. There has been some fears in Washington that Trump would make some kind of comment or agree to a language change on how the US views Taiwan's status. That would be in line with what Beijing is hoping for, according to CNBC's expert analysis. Here is why this matters for markets. Taiwan is the world's most important semiconductor manufacturing hub. TSMC, Taiwan Semiconductor Manufacturing Company, makes the chips that go into virtually every advanced computing device on Earth, including Nvidia's GPUs, Apple's iPhone processors, and AMD's data center chips. TSMC's market cap is over $1 trillion. If the US weakens its commitment to Taiwan's security, even implicitly, even through a subtle language shift in a joint communique, it changes the risk calculus for every company and investor with exposure to Taiwan's semiconductor industry. The Taiwan risk premium, the discount investors apply to TSMC and other Taiwan-based companies because of the military risk, would expand dramatically. TSMC stock, currently trading on the NYSE as TSM, would be one of the most directly affected securities. But the ripple effects would go far beyond TSMC. Because if Taiwan's chips become less reliably accessible, every tech company that depends on them faces a fundamental supply chain risk repricing. This is the bomb that doesn't make headlines immediately, but reshapes global markets for years. Watch the Taiwan language in the joint statement very carefully. I want to zoom out even further now, because the Trump-Xi Summit isn't just about bilateral US-China relations. It is about the architecture of the global economy. And the decisions made in Beijing this week will set off a chain reaction that touches every major economy on Earth. Let me walk you through the domino effect. Before I do, drop a comment right now. Tell me, which country's economy do you think will be most affected by this summit? Us, China, Europe, Japan, India? Just name the country. I read every comment on this channel, and right now at our size, I respond to most of you personally. Comment now, then keep watching, because this next section is where it gets really interesting. Domino 1, Southeast Asia. The biggest surprise winner, here, is the country bloc that almost nobody is talking about in the context of this summit: Vietnam, Indonesia, Thailand, Malaysia, Mexico. Over the last 2 years, as China decoupling accelerated, global manufacturers have been moving supply chains out of China and into these countries. Apple moved some iPhone production to India and Vietnam. Samsung moved semiconductor assembly to Vietnam. Dozens of consumer electronics manufacturers shifted to Thailand and Malaysia. If this summit produces a genuine US-China trade detente, lower tariffs, stable supply chains, reduced decoupling pressure, some of that manufacturing shift might slow down or reverse. That could be negative for the Southeast Asian countries that have benefited from supply chain relocation. But if the summit fails and decoupling accelerates, Southeast Asia and Mexico continue to be the big winners of the China Plus One manufacturing strategy. Companies will keep moving production, and these countries' economies keep growing. Domino 2, Japan and South Korea. Oil and chips, Japan and South Korea are major importers of Middle Eastern oil. Every dollar that oil stays above $100 is a direct hit to their trade balances and corporate margins. Japanese companies have been absorbing enormous energy cost increases for 3 months. If the Beijing summit produces Iran progress and oil falls, Japan and South Korea get a massive economic relief. Their central banks get room to manage their currencies differently. Their stock markets, the Nikkei and Kospi, would likely rally strongly on any credible Iran peace signal. On the chip side, South Korea is home to Samsung and SK Hynix, two of the world's largest memory chip manufacturers and direct competitors to Micron. Any change in US chip export controls that affects China affects the entire global semiconductor competitive landscape, which means it directly affects Samsung and SK Hynix's market positioning. Domino 3, Europe. The rare earth and energy dependency, Europe, is simultaneously dealing with energy costs elevated by the Iran war and a critical dependency on Chinese rare earths for its green energy transition. European wind turbine manufacturers Vestas, Siemens, Gamesa rely heavily on Chinese rare earth magnets. If the Beijing summit produces a stable rare earth supply agreement, European manufacturers get supply chain relief. If rare earth supplies remain restricted, Europe's green energy build-out faces continued cost pressures. Germany, the engine of the European economy and the world's largest exporter of industrial machinery, has particularly high stakes. German automakers BMW, Mercedes, Volkswagen sell significant volumes in China and source components globally. Any change in US China trade terms ripples through German supply chains almost immediately. Domino 4. India. The strategic wildcard Fay India is watching this summit with perhaps the most complex set of interests of any major economy. India has been positioning itself as an alternative to China in manufacturing, in technology, in geopolitical alignment. A successful US-China détente that reduces decoupling pressure could slow India's rise as an alternative manufacturing hub. But India also desperately needs lower oil prices. It is the world's third-largest oil importer, and elevated prices have been pressuring its current account deficit and driving inflation. Any Iran resolution that brings oil lower is a major positive for India. Domino 5. Global AI race. Who wins the next decade? Fay. This is the one that matters most for the long term. The AI arms race between the US and China is the defining technological competition of this era. And the rules of that competition, specifically, who gets access to what chips, what data, what models, are being negotiated in Beijing right now. If the US relaxes chip export controls, China's AI industry accelerates, the gap between us and Chinese AI capability narrows faster. That changes the competitive landscape for every US tech company operating in markets where Chinese AI is also competing. If controls tighten further, China's AI development slows, but at the cost of lost revenue for US chip companies and the risk of China accelerating its own domestic chip development, which could eventually produce a competitive alternative to Nvidia's products either way. The AI competition doesn't end, it just changes shape. Alright, let's talk specific names. This is the section you've been waiting for. I am going to give you my analysis of the stocks with the most direct exposure to this summit. The ones where the outcome of these 2 days in Beijing will create the biggest moves. Boeing, BA. The most directly exposed Fay if the mega deal is real and binding. Boeing is a rocket ship. The company has been fighting manufacturing quality issues and regulatory scrutiny for 2 years. A credible $100 billion Chinese order changes the entire narrative overnight. The stock could add 10 to 15% on the announcement alone, with further upside as analysts upgrade earnings estimates. Fay watch the fine print, ***, a real order, specific airlines named Airbus, comparable terms, realistic delivery schedule. A fake order, vague mood language, intention to purchase. No specific buyer named Fay Devon Energy, DVN, if Iran fails, Devon wins Fay. I've mentioned Devon in previous videos. If the summit produces no Iran progress, which is the more likely near-term outcome given where negotiations stand, oil stays elevated and Devon, with its strong balance sheet and AI-driven operational efficiency post-Coterra merger, continues to generate extraordinary cash flows. Raymond James has a strong buy rating with 40% plus implied upside. Fay Nvidia, NVDA, the binary bet Fay if chip controls relax. Even partially, massive pop. If they tighten, significant sell-off. Nvidia reports earnings on May 20 regardless, which Goldman Sachs expects to be a beat, and raise the summit outcome adds a layer of binary risk Fay reward on top of an already high-stakes earnings report. This is high-risk, high-reward position. Accordingly, agricultural giants, ADM, Bunge Fay, a large credible Chinese purchase commitment for soybeans, corn and beef flows directly to these companies' revenues. They've been in holding patterns. A summit catalyst could be the breakout trigger. Airline stocks. Delta, DAL, United. Wool ***. This is the Iran wildcard play. If Beijing produces any credible signal that Iran negotiations will resume or accelerate, airline stocks rally, both because fuel cost expectations drop and because demand for international routes, especially China routes, which have been disrupted, improves. TSMC the Taiwan risk Fay. If the summit produces any language shift on Taiwan, any weakening of US commitment, any implicit acceptance of Chinese sovereignty claims, TSMC faces an immediate risk premium expansion. The stock already trades at a discount to its fundamental value, partly because of Taiwan geopolitical risk. Any summit outcome that increases that risk reprices the stock lower. Fay Qualcomm chip control sensitivity. Fay already down 13% in a single session last week, partly on chip control fears. If the summit tightens export controls further, Qualcomm, which generates significant revenue from licensing its technology to Chinese smartphone makers, gets hit again. This stock is highly sensitive to any US-China tech policy outcome. Consumer staples and defensives. if Iran resolves Faye here is the counterintuitive one. Stocks like Procter & Gamble, Johnson & Johnson, Coca-Cola, the safe haven stocks that investors have been buying because of economic uncertainty, would actually sell off if the summit produces a genuine positive outcome. When risk appetite returns, money rotates out of defensives and into growth. The better the summit goes, the worse defensives perform. Faye long duration treasury bonds, Faye a positive summit outcome, especially one that includes Iran progress, would push rate cut expectations forward, which initially sounds good for bonds, but the bigger effect would be a return of risk appetite that pushes investors away from safe haven treasuries toward equities. Bond prices fall, yields rise. Okay, I've laid out the scenarios. Now let me tell you what I actually think the most likely outcome is, and what that means for your portfolio. Me base case, Faye on trade, asterisk, a credible Boeing order gets announced, probably $60 minus $80 billion, may be branded as $100 billion, but with enough flexibility in the terms that analysts will debate how binding it is. Agricultural purchase commitments are announced. A Board of Trade and Board of Investment framework is announced as a new permanent dialogue mechanism. Tariffs are slightly reduced, maybe 47 to 40% on some categories. Faye on rare earths, asterisk, a stability agreement is reached. China promises to maintain rare earth and magnet exports at current levels, in exchange for some tariff relief. Not a full normalization, but enough to take the rare earth weapon threat off the table for the rest of 2026. Faye on chips, asterisk, no major movement. This is too complex and too strategically sensitive to resolve in 48 hours. The two sides agree to continue discussions. Export controls stay roughly where they are. Jensen Huang leaves Beijing with relationships strengthened, but no concrete policy change. On Iran, asterisk, this is the big question. My honest assessment, the summit produces vague, positive-sounding language about Iran. Something like, both sides agree on the importance of stability in the Middle East, but no concrete Chinese commitment to mediate. Xi is happy to signal willingness to help without actually committing to do anything specific. Trump takes that language back to Washington and spins it as progress. Oil stays elevated, the market gives a brief positive reaction, and then returns to baseline. Faye on Taiwan, asterisk, no explicit language change, but Trump says something off, script that Beijing interprets favorably and immediately publicizes. The State Department spends a week clarifying what Trump meant. Uncertainty increases. Faye net market effect of my base case, asterisk, a relief rally, maybe 1 to 2% in the S&P 500 on the trade deal headlines. Boeing pops 8 to 10%, agricultural stocks move higher. The rally fades within days as investors realize the Iran situation is unchanged and the fundamental macro headwinds, 3.7% inflation, Fed frozen oil above $100, haven't moved. Then all eyes shift to Nvidia on May 20. This is a market that moves from catalyst to catalyst. The Beijing Summit is the catalyst this week. It buys some time, but it doesn't resolve the underlying tensions. And the market that comes out the other side of Beijing is still the same fundamentally complex, geopolitically uncertain market that went in. Let me bring it all home. We are living through one of the most consequential moments in modern economic history. Two superpowers, one room, a meeting that will ripple through oil prices, AI development, semiconductor supply chains, airline stocks, rare earth markets, and the global trade architecture that every company in your portfolio depends on. The investors who will navigate this moment successfully are not the ones who react emotionally to each headline. They're the ones who understand the structure of what is happening. The 5 bombs, the domino effects, the specific stocks with binary exposure, and who have a clear plan for multiple scenarios. Here is your framework in 3 sentences. Watch oil first. Oil tells you whether Iran progress is real. Everything else follows from oil watch. Boeing's fine print second, the number doesn't matter. The structure of the deal does. Watch the Taiwan language third. It is the slow-moving bomb with the biggest long-term consequences. Now here is what I genuinely need from you. This is video 5 on a brand new channel, and I want to be completely straight with you. The only way YouTube shows this content to more people is if you engage with it. Every like, every comment, every subscription tells the algorithm that what we're doing here is worth distributing. So I am asking for 3 things, and I am going to tell you exactly why each one matters. Faye first, the like button, asterisk 1 click, it takes less than a second. And for a channel at our stage, it is the single most important signal you can send to YouTube's algorithm that this video deserves to be seen. If this video gave you one framework, one stock name, one thing to watch, hit like right now. The comment, **** here is your question. After everything I just laid out, which of the 5 bombs do you think will actually go off? **** Boeing deal, Iran mediation, chip exports, rare earths, Taiwan? Pick one. Tell me in the comments. I will read every single response, and at our current size, I will personally reply to as many of you as I can today. Third, subscribe, ****. Trump and Xi finish their meetings on Friday. When the announcements come out, I will be back immediately to break down what was actually agreed, what it means for the specific stocks I mentioned today, and what moves make sense in the aftermath. That video is going to be essential viewing. Subscribe now so YouTube actually shows it to you, because if you are not subscribed, the algorithm might not surface it when you need it most. We are building something here. A community of investors who think clearly, act on data, and don't get jerked around by the noise. This is Wall Street Alpha Analyst. See you when the announcements drop.